Welcome to The Curious Investor, Saxo's video series on topics that drive the investment markets. With me today is Charu Chanana, Saxo's Head of FX Strategy and Global Market Strategist. Today, we are talking about the Magnificent Seven, and given how much it has performed in the past year, how can our investors diversify away from these holdings? So for the uninitiated, the Magnificent Seven refers to Alphabet, Apple, Amazon, Microsoft, Meta, Nvidia, and not forgetting Tesla. So based on the AI craze that we've seen so far, investors have pushed these valuations to astronomical levels. Yeah. Charu, what's your view on this?
Yeah, I mean, great topic, Hou Tian, and great to be back with you also this time. I think it's something that is on top of every investor's mind. You want to be a part of that rally, but you're also starting to get concerned about those sky-high valuations. I would say that this earnings season has been good for most of those stocks, better for some than the others. There's a little bit of a diversification happening within the Mag 7 space, where you see the likes of Meta and Microsoft doing a little bit better, Tesla getting, I would say, slowly getting out of that league as well. Apple a little bit lagging also. But the big question from here is that earnings expectations, because of that AI craze, as you mentioned, are sky high. They've met at this time, but will they continue to be able to meet those high earnings expectations? And that's what is really one big risk factor. Now, you would obviously say that that's a risk factor for any stock, right? I mean, they have to meet really the earnings estimate to continue to do well. But the problem with these stocks is that for a lot of our investors, this is the key exposure they have. And with the kind of growth that they've seen over the last 1 year, as you said, they've become a huge part of the index, and they've become a huge part potentially of your own portfolios as well. So I think it's very important to understand that these stocks belong to just the US economy, just the tech sector of the US economy. So the risks of the index and the risks of your portfolio are also becoming very singular. And that's what I think really highlights the importance of diversification at this stage.
You mentioned diversification. Yeah. So how should investors diversify away from the Magnificent Seven then?
Right. So, I mean, of course, so Magnificent Seven are large cap stocks. So one simple way is that you get some exposure to the small cap stock, something like a Russell 2000 index, which is made up of small and medium enterprises more so compared to the large cap stocks. Then the Mag 7 are also growth stocks, right? So the other way is to diversify into value stocks, something, that's something like a Warren Buffett style, good companies, quality companies with sustainable long-term earnings, growth, and maybe even hefty dividends, or something of that style. There's also a lot of value ETFs if people want to consider that. But I think the other ways really, which is also now getting a lot of popularity, is to really diversify away from the US and consider some global markets as well. And something that's been popular for many, many ages is to diversify across asset classes. So, because if you are a majority equity holder, diversify into bonds, into commodities, and the likes.
What are the other stocks that's outside of the US that you're probably watching that can be quite interesting to look at as well?
Oh, that would be a huge list, I would say. So actually, our CEO of Saxo Singapore, Adam Reynolds, he came up with this screener yesterday. I thought that was super interesting. So what we did was we filtered global stocks by market cap. So anything above a 50 billion US dollar of market cap. And we found there are more than 10 stocks that actually have annualized returns of over 50% in the last 5 years. It was a very a strong diversified list, I would say, starting from something like a Novo Nordisk, which is a pharmaceutical company based in Denmark, which is now getting into this obesity drug space. I think this is a huge new innovation there. There was some other European companies like ASML, which is a semiconductor, a chip company, particularly out of Amsterdam. There were some Australian miners there, I think Fortescue Metals. There was Japanese companies, quite a few of them in that list as well. The top of my head, I think the top of that list was Tokyo Electron, with about 500%, over 500% return cumulative in the last 5 years. So I think that was a very interesting set that I came across. Some very interesting names, value stocks, chip stocks, obesity stocks. So very, very diversified list across geographies as well as across industries.
You mentioned some Japanese names, and we see that the Japanese market has gone really crazy. So what's driving all of this growth?
Yeah, we're at record highs, almost near record highs now as we're recording this episode today. But yeah, I think a lot of structural factors really supporting that momentum. There's been a slew of corporate governance reforms in the Japanese economy. There's obviously a lot of interest because of all the geopolitical tensions, flows moving out of China and getting diverted to Japan. And Japan is a technology innovation hub, right? So there's obviously a lot of interest in that AI space, in the semiconductor and chip space as well in Japan. And I think the weak yen is certainly helping a lot of the exporters there. So certainly a very interesting market. And what makes it even more interesting right now is that, last year we saw Warren Buffett kind of increasing his exposure to Japan. That obviously was a tactical support to the market as well. And I think, the sustained weakness of the yen, even this year, I mean, we do think that eventually when we get to that Fed rate cut cycle, the yen can strengthen. But until then, until we see a real threat of a global recession, there's really nothing that can risk this rally that we're seeing in the Japanese equities. And particularly interesting, the fact that, a lot of investors ask me that Japanese markets might be very good for Japanese investors, but for foreign investors, is it still good? Because, because of the weak yen, you kind of lose the returns that you're making in that market, which is a very valid point. But, I think, and that's the beauty of our Saxo platform, that what you can do is you can obviously get some cheap financing rates because interest rates in Japan are very low to kind of go long the equities in Japan. But at the same time, hedge your yen exposure, for which you have to, probably go long dollar yen, which is itself a beautiful positive carry. So I think there's just a lot of opportunity that investors are attracted towards right now in the Japanese markets. And there's these big famous names. You consider Sony, Panasonic, Toyota. Everyone's familiar with them. Nintendo, fast retailing, the Uniqlo parent. There's a lot of interest, like I said, in the chip stock. So consider Advantest. I mean, that's had a rapid rise in the last several months. Then we have, also the Warren Buffett names, mostly the commodity trading houses. A lot of interest there. But also, if investors want to take a more diversified exposure, they can consider ETFs for Japanese equities as well.
Charu, thank you so much for expanding our investment horizon. For investors who are interested to know more about other investment opportunities outside of US, Peter Gunry, our head of equity strategy, has articles on markets such as Japan and Europe, which is available on the Saxo Trader platform. So never let your choice of broker dictate where you can invest in, as you can see that there are a lot of opportunities outside of the US. So the Saxo Trader Go platform gives you access to more than 50 markets in the world. So do check it out, and thank you so much.